Hi, this is Lara at Elliott Stock Market with your weekly US oil analysis. This analysis is done on Wednesday, 1st of May, after New York's closed. For Tuesday the 30th, I'm recording this video at 2 a.m. New York time, very early in the morning on the 1st of May. I've changed my wave count on the daily chart and hourly chart level. These very deep corrections, the last two corrections, could indeed be a series of overlapping first and second waves, but it's more likely that we're seeing a leading diagonal unfold in a first wave position. Within diagonals, the second and first waves are usually between 66 and 81% of the first and third waves. In this instance, the second wave is over 90%, the first wave, and the fourth wave is 74% so far of the third wave, and overall it does have quite an overlapping diagonal look. Technically this diagonal is expanding because the third wave is longer than the first, and the fourth wave is also longer than the second, but because the fourth wave was so sharp and steep, the trend lines when we draw them look like it's contracting. Usually, if this diagonal is expanding, I'd expect the fifth wave to be at least as long as the third. That would be achieved at 82.59, so I'd expect the next wave downwards to reach that point or below. However, it may be that that doesn't happen because I have seen diagonals where the third wave is still the longest. But what we do know for a leading diagonal is the fifth wave may not be truncated, so it must make a new low below the end of the third wave. I will expect to see price move below 85.64. Within a diagonal, the fourth wave should overlap into the first wave price territory. The rule for the end of the fourth wave of a diagonal is it may not move beyond the end of the second wave. The invalidation point is now at 97.73. So I'm much happier with this wave count. These two very deep corrections have a much better fit as a leading diagonal. Let's have a look at this structure on the hourly chart, where the start of the fourth wave zigzag is this point down here. Within a diagonal, the second and fourth waves must subdivide into zigzags. For the actionary waves 1, 3 and 5, they are usually zigzags within leading and ending diagonals, but within leading diagonals they may also be impulses. In this instance, both of them subdivide as impulses. So we may see either a zigzag or an impulse to the downside unfold. This upwards movement does subdivide very nicely as a zigzag for the fourth wave, and when we use Elliott's channeling technique from the start of A to the end of B with a parallel copy on the high of A, it's showing us where prices found support in the last few hours. We need to see this small channel breached with very clear downwards movement, not just an overshoot, but a full hourly candlestick, or in this case on the 2 hourly chart, a 2 hourly candlestick below the channel and not touching the lower trend line to provide a clear breach. At that stage you can have a bit more confidence that the fourth wave zigzag is over and the next wave down should then be underway. Expect price to move below 85.64 and probably below 82.59, but not necessarily below the second point. So this deep upwards correction, I was expecting a bit of upwards movement, but not nearly as much as we got. It invalidated my main wave count. I did very quickly publish an alternate, but I've changed the wave count upon further reflection. It looks like we're not seeing overlapping first and second waves. We may very well be seeing a leading diagonal unfold, which means the fifth wave can't be truncated, which means we must see a new low for the next wave down. And that's all for me with your oil analysis for this week, and I hope that everybody had a fabulous weekend.